could. Some are saying the indication from Ben Bernanke was next year we see the tapering, but Barclays saying no, we're reading more that they'll actually taper sometime late this year. What did you interpret from that?
I think there were three things to take out of the massive FOMC meeting overnight. First of all, the market's pricing in that we will see quantitative easing stopping in mid-2014. Secondly, that we'll start to see tapering by year end. And thirdly, the markets are now pricing in rate rises in 2015. And that's really on the back of some of the bullish economic forecasts which came out overnight. In fact, if we have a look at the Fed forecast now, they are forecasting that the US economy will grow by as much as 3.5% in 2014, and that the unemployment rate will fall down to 6.5%. Of course, that's had a massive impact on assets around the globe, and the big one has been in the currency markets. We've seen the Aussie dollar falling down to a near 3-year low. So what does it mean for the Aussie market? Well, we are going to see heavy selling today. We also see the expiry of index futures and options. So that's going to add to the volatility on our markets. If we have a look at the impact of the Aussie dollar, what we have seen is the key impact is the outflows that we see from Australia by international investors. And if we have a look at how international investors are positioned at the moment, they're really underweight the materials and the mining space, and they're overweight the high yielding space. So no doubt we're going to see a heavy impact in terms of the banks and the Telstras of the world as we do see those outflows because of that weaker Aussie dollar and of course the forecast in a bigger fall in the Aussie dollar. On the flip side, if we have a look at the areas which have outperformed in the past month, they're sectors like the energy and the healthcare space which benefit from a lower Aussie dollar. But with oil prices tumbling overnight, we'll still see some losses in that energy space. But all in all, it does look like there's going to be some pretty heavy selling coming into the Aussie market. And
then, therefore, the stocks in that space. Julia, Dr. Copper, 6-week lows overnight. Iron ore, 5th session of gains. Put it into context.
It's been an amazing run for iron ore. In fact, we're seeing iron ore prices now 120 US a tonne. 5 straight sessions of gains. This is despite demand still being relatively weak. It does look like restocking happening, and that's been helped along by the, I guess, reflected in the rise that we've also seen in the Shanghai rebar steel prices as well. We have a look at iron ore stocks. They've done extremely well in the last 5 sessions. In fact, we've seen Atlas up by 4%, we've seen Rio Tinto gaining 5.5%, and we've seen Fortescue up by 6%. Of course, there's going to be a pretty big test today, and that's when the HSBC flash PMI numbers come out. This is the first read that we get into the manufacturing sector for the month of June, and expectations are that we will see it remaining steady at 49.2. But of course, this number will have an impact in terms of the material space. But for the time being, it looks like iron ore prices pretty well supported. Now, Goldman Sachs has also come out this morning with some forecasts around iron ore pricing. They're predicting $134 in the second half of this year, but they are predicting that prices will fall down to $80 by 2015. So it does look like longer term we are still going to have the supply issues coming into force, and that's the massive amount of supply which is going to come online in the Pilbara region from the likes of Rio Tinto and Fortescue over the next year. So that's going to have an impact. But altogether, iron ore prices looking pretty good. The 5th session of gains, and we've seen those iron ore plays doing well as well.
Well, we have Pacific and go inside Sydney Airport. Julia, May 2013 traffic numbers.
We have seen traffic numbers coming through and an increase of 2.8%. Now, domestically, we've only seen passengers growing by 1.6%. And once again, it's the international side which has been impressive with a growth of 5.9%. Now, the international side, of course, is being supported by Asia at the moment. In particular, we have a look at the capacity from China. That increased by 24% during the month. And so we saw passengers from that nationality up by 29.4%. Singapore, still a great performer there, up by more than 40%, and Japan up by around about 11%. But I think there's some fairly exciting things that were also announced in June, and that is the second daily Emirates A380 flights that were announced. We've also seen Virgin increasing its Sydney to Perth exposure in the business market. We've seen Jetstar also starting to fly from Sydney to Uluru. So altogether, some pretty exciting things going on for Sydney airports. Of course, that's that's with a backdrop of more competition in terms of the airlines. So unfortunately, it's probably going to be a bit harder for Virgin as well as Qantas. But Virgin also announcing a 10-year deal with Brisbane Airport Corporation, and that's going to mean that it has access to the terminal for 10 years and also some upgrades to its terminal as well. So that may cause some tension with Virgin and Qantas, but altogether, I guess the airport's the big winner in the extra competition that we've seen coming online in Australia over the last couple of years and the capacity increases that we've seen from the airlines.